Hey everyone, Mike Hoover, owner of Mavi Unlimited again, sending you a quick video, June 2024. Today we're going to talk about the state of the market, both in terms of the rental market and then also the resale market. So, I think you've read things from me somewhat recently saying that we are kind of worried about a slowdown when it comes to rental prices, and that definitely has proven to be true. We can see that the average rents for a 1, 2, 3 bedroom apartment are clearly down from where they were a year ago, certainly from 24 months ago. Single family homes are still up marginally. I think you look at the year over year rent increase, it's about a 4% increase, so more or less keeping up with inflation, but not a whole lot past that. What we think is going to continue to happen over the next 6 months, the next year, is probably some continued downward pressure on rents. It always starts with A-class new construction multifamily, sort of the creme de la creme, the new construction stuff downtown. And what we are seeing in that world is a lot more concessions. So basically, hey, if you sign a lease with us, we'll give you 2 months for free, or we'll waive the security deposit, or some other price break to get someone to move in. We're seeing more of those concessions. And then on top of that, we're also seeing a lot more inventory. So renters have more choices than they did a year ago. So while this is sort of indicative of a slowing market, I think in the future, again, it's going to start with the A-class and work its way down to the B and C, more normal, what I think a lot of you all are in the wheelhouse of multifamily stuff, townhomes, condos, that sort of thing. Single family homes seem like they are a little more resistant to this. Reason being, I think single families always are a little less transitional. You have longer tenancies. People with families in particular like stability, and so you see longer tenures in single family homes than you do in multifamily. But because the multifamily world is starting to shift a little bit and we are seeing those decreases, we do expect that eventually the single family market will catch up to this, and we are going to continue to see rents that are flat, if not slight decreasing. Super dependent on the overall economy. So I think if inflation pops up again, you're going to see this decrease in rents be larger. If the economy stays like it is right now, job market stays like it is right now, we ought to see a lower percentage decrease in the rents, but still it does appear like there are some headwinds there of cooling rents. So our recommendation in light of all this is to take what you can now before the market does continue to shift. We've been starting to advocate to a lot of our owners the notion of signing longer than the normal 12-month leases. Asking tenants if they would sign a 24-month lease with a modest increase baked into month 13 of the 24-month lease. Reason being, we feel that it is going to do a great job of creating some longer relationships with tenants, hopefully turning them into long-term residents instead of this transactional, I'm here for a year and then I'm out type of relationship. Also, more stability for our property owners. You're going to see less vacancy, you're going to see less make-ready turnover cost, and obviously that's all beneficial. So we think it's win-win for both parties to sort of push this agenda of a longer lease, just in terms of stability for both sides of the equation. So that's our answer to what we see as being some headwinds of declining rents. When it comes to the sales market overall, things are continuing just like they have been for the last 6 months, the last year. Interest rates are up. Average 30-year mortgage right now is somewhere like 7.5%. I've seen it as high as 8.5%, 9% on investment product, which is the boat that a lot of you all are in. So there's just very little incentive to buy something unless you have to move. And we think that for right now, there probably is a large amount of potential buyers sitting on the sidelines waiting for interest rates to drop into that 5 or 6% category again. Once that happens, we think that there's a great chance that we could go back to this multiple offer, high intensity seller's market type of situation where it is, what it was for so many years, where you put the house on the market on a Friday afternoon and wait for the offers to roll in. But for right now, if the house is going to sell, it needs to be perfect. And when we say perfect, we really mean, model home, show home quality, perfection. Buyers facing high interest rates have no appetite to walk into a project. So if you're thinking of listing a home and it's, I want to do some stuff to make it presentable, but I don't really want to replace the flooring, even though I know there's stains on it. Or, the paint isn't new, it doesn't look great, but I'm going to see if I can make it work. You are more than likely going to see your house sit for longer than you were expecting to, if it sells at all. And so we are just advising our property owners, if you are going to try to sell your home, make sure it's as good as you can make it. Put that extra investment in to try to make your place the move-in ready home versus the project home that you're trying to help someone justify a price for with, again, a mortgage rate that they're already not comfortable with. People just don't have an appetite for high interest rates and work that needs to be done once they move in. So hope that gives you a little bit of insight. There's a couple links below to some articles. If you'd like any more information, any questions, feel free to give me a call or shoot me an email. Once again, as always, thanks for your business. Hope you're having a fantastic June, and we will talk soon. I'm going to try to do another video at the end of the month to go over some new legislation. Just wanted to give the current legislative session a chance to wind down a little bit more. Thanks a lot.